What's up, everybody? It's Brandon Lokaren here, and today I wanted to talk to you guys about the buying process and what it looks like to buy a property either on market or off market, right? So, without further ado, let's get started, okay? Let's go. So, first of all, is you should find an allied or trusted resource that you could trust that is in the form of a realtor, right? If you're going to find a deal on market, you're going to find a realtor that has your best interest at heart. They're going to have resources for you, they're going to have lenders for you to work with. They're just going to be like the package deal, right? Now, let's say you're just shopping around, you're talking to wholesalers, you're not really going to have a realtor or a fiduciary duty. No one's going to have fiduciary duty to you, right? So, however, I highly recommend using someone like that or a realtor to help you navigate it, at least be a resource for you, and someone that you know, like, and trust, because then when you do sell that property, either flip it or if you're burning it or whatever, they're going to be a resource that you can use so that you could know exactly what your exit strategy looks like, right? So they could run comps for you and say, hey, this is a good deal or not. Or, and maybe you could give them a little bit on the front end and then say, hey, you'll get the listing on the back end if it's a flip, just to help them out and make them feel like you're on their side as well, right? Because, you scratch my back, I scratch yours, right? So, first step is obviously finding someone that you know, like, and trust that has your best interest at heart at all times. So, next up, what we like to do is we analyze your needs in a consult. So, whether you're an investor, first time home buyer, second home buyer, or whatever you are, we're going to sit down with you and learn about what your goals are, right? So, are you looking for a home for your family? Are you looking for your second property, third property, fourth property? Whatever the situation might be, we're going to analyze and see what your goals are, right? As an investor, we're asking you questions like, hey, what do you want to cash flow in the next 5 years? What do you want to cash flow in the next 2 years, right? So that way we know exactly what deals we need to find to help you accomplish your goals, right? And whether if you're a first time home buyer, what we're going to say is like, we're going to be like, hey, look, what do you want? Do you want a deck on this property? Do you want how many bedrooms do you want for your family, or if it's by yourself or whatever? We're gonna ask you these questions that really matters because you're gonna be living there. So we want to make sure that we're fulfilling those duties as well, right? So once that's done, we refer you to a lender, whether it's hard money, or maybe you're working with cash or a conventional lender, right? So we're going to refer you to a lender for you to get pre-qualified. So you want to always be pre-qualified when you're shopping for a property, because then that gives you the ability to kind of jump on a deal like that, right? So when something comes up, you're ready to go, and any good realtor or any good fiduciary out there will not work with you or take you to see properties until you're pre-approved. So get pre-approved and you're good to go. If you're working with cash, you're just going to need a bank statement, or ask your bank to write you a letter stating that so and so has in excess X amount of funds, right? So after that's done, we're going to select some properties based on the criteria to go out and look at, right? Because we're going shopping now, right? And after we look at those properties, you're going to be like, hey, look, like, Brandon, this is the house. This is it. This is perfect. Or this is the 4 unit I've been looking for. It cash flows. It's already tenant occupied. It's in a great state. Whatever the situation might be, this is perfect, right? So what we'll do then is we'll write an offer to purchase. And as a realtor, we have access to forms that are provided by our local board forums, so that we'll use those forms to help navigate the contract process. Now, let's say you're buying an off-market deal and it's through a wholesaler. They're going to have an assignment contract, and every wholesaler kind of has that similar contract or a similar language in their contracts. So they all kind of look the same. However, if you're working with us, we're familiar with those and we're able to help navigate that. But generally, it's an assignable contract, and it's very short contract compared to your standard realtor contracts, and they're just assigning the deal to you, and they're taking payment at your closing, right? So now that deal doesn't have any contingencies, right? So with an on-market deal, we could put contingencies in, but with an off-market deal, typically there's no contingencies unless we negotiate it in, right? So, we wrote an offer. This thing is perfect. We're good to go. There may be some counter offering, negotiating. If it's an on market deal, we might go back and forth and say, hey, seller, like, we want to close on this day, but they might say, hey, we need a rent back, or whatever situation might be. We're going to figure that out. If it's an investor, we're going to ask for, if it's being transferred with tenants, we're going to ask for their security deposits. We're going to ask for copies of the lease. So there's going to be some sort of like feasibility study period. Especially when it's a commercial deal or a large multifamily property, where there's going to be a feasibility period. So closing can take anywhere from 30, 60, 90 days, whereas a single family home could take 2 weeks to 4 weeks, right? So once both parties agree to the sale and transfer of the property, that's known as a ratification, right? So that means seller agrees, buyer agrees, we're moving forward with this deal, everyone signed off, and we're good to go. After that's done, as a home buyer, when you're buying something on the market, your earnest money deposit is due, right? So what an earnest money deposit is essentially a good faith, right? You're telling the seller or the investor, the wholesaler that has this property, I'm showing you I have some of the money to close. Like, we're good to go. Like, we're solid, right? And that's usually about 1-2% of the purchase price. Now, as a wholesaler, if you're buying it from a wholesaler, like that earnest money deposit is non-refundable, because remember, you're buying a non-contingent deal. You're under contract, it's not contingent, right? Then if it's a home on the market, we're going to do inspections, right? So we're going to have home inspections, go through the home, make sure nothing is wrong with it. You have the option to back out depending on the negotiations. We could put it in certain ways that you could either back out, or you could negotiate repairs, or maybe you just did it for informational purposes only, so you got to move forward. Then we can remove that contingency, right? So if it's a property that we're buying, commercial property, and there is a feasibility study, we could remove that contingency once we get past it, right? So there's a lot of things that can kind of come up during the inspection process, but it doesn't really go behind walls, so you don't know what's going on with it until like you actually get in there and start doing the work. Now, if it's a flip, like, you're gonna kind of know already based on walking through with your contractor, hey, this thing is a complete gut job. It needs a new bathroom, it needs new plumbing, it needs new electric. Whatever the situation is, you're gonna figure that out. But as a home buyer, like, where you're gonna live there, you're like, man, I don't know, like, we need everything fixed, right? So I was doing a deal recently, and the buyer, there was an issue with the chimney, right? So chimneys are a big thing, right? Because to rebuild an entire chimney, it's about $18,000. It's expensive. So the chimney was a big thing. We had a chimney inspected, and it turned out nothing was wrong with it, but the inspector had flagged it just because, inspectors are kind of like a general practitioner. They're not a specialist, so we needed a specialist, like a chimney guy, to come out and look at it. And the chimney guy said it was fine, and everything worked out. But like, those are some of the situations that you encounter when you're buying a home as a home buyer, right? And maybe as an investor, if you're buying it on market, but if you're buying it through a wholesaler, again, you're not going to get those opportunities to do a home inspection. Once that's done, you're going to complete your mortgage application with the lender, right? So if it's a hard money lender, you're just going to send them docs, and they're going to generally have all those documentations in order before you even got under contract, because they understand that they have a reputation to uphold, and they want to close on time and not screw anything up. So because there's a lot of other investors that are looking at them, because they're in the marketplace. It's a very small world in the investor world, because each company is really well known, and they don't want to mess up, because they could be losing a ton of business, right? Now, if it's a regular home that you're buying and you're financing the regular method, conventional method, either FHA, conventional, or VA, there's going to be a process where you submit a bunch of documents to the lender. They're going to ask for more documentation. And essentially what they're doing is they're building a case for you to present to the underwriter. So the loan officer is like your attorney, if you will, and they're building a case for you to present it to the judge, who is the underwriter. Because once they build that case, they want to have everything in order: your bank statements, W-2s, whatever it is, any financial documents, and your past year's tax returns, to be able to present it. Once that's done, they're going to run your credit again if they need to. They'll order the appraisal. The appraisal is essentially a third-party inspector that goes out to the property to determine what the property is actually worth, right? If it's a hard money deal, what's going to happen is, like, you're going to present those comps to the hard money, and they'll underwrite it. So their underwriter appraiser is kind of like the same in a way, because you're closing in 2 weeks. So After that's done, the going back to the traditional method of buying a home, the loan officer is going to present it to the underwriter. They're going to submit it, and the underwriter is going to either approve it or disapprove it, right? So when the underwriter goes through the file, they're looking for things like on your bank statements, like do you have any other. One of the biggest things is like they want to make sure that you don't have any other like personal loans that is not like showing up on your credit report, right? So if they see something like, well, Brandon was sending $200 like every month for the past 2 years to, um, you know, Ricardo, right? They're gonna find out and to be like, hey, what is this? What is this, Brandon? Explain this. And you just have to either provide an explanation or show that you have enough income to cover it or whatever it might be. But they just want to make sure that you're going to be able to pay this loan off and on time. Um, After it goes through underwriting, they're going to kick out conditions. So a condition might be you being employed at the time of closing. Um, Another condition, like the explanation I needed to provide of why I'm sending, my best friend $200 every month. Um, another, another thing is like usually they're like, hey, can you provide another month's bank statement? If you're self-employed, they're going to ask for a lot more stuff too. So those are all things you have to look forward to when you're buying a home, especially when you're doing it the regular method, right? And not hard money or not cash, right? So once that's done, we're going to talk to the settlement company. In the meantime, the settlement company has been working behind the scenes. And this is kind of where we pick back up with the hard money and essentially like because the settlement company, their job is essentially to make sure that this property that you're buying is going to be transferred like free and clear, and there's no like craziness going on. I was doing a deal one time when I was first getting into the business, and there was a property, and the seller didn't tell me that there were liens on the property, and we didn't find out until after we were like the title company had pulled title, and we're like, oh snap, like there is like $200,000 in IRS tax liens on this property, and we were gonna close, and like the wife was like really depending on this money to be able to buy something else on her own, right? So divorce situation. So what we had to do was like essentially I was like, if we sell this house, like this woman's gonna be homeless, and we ended up having to squash the deal, and like it was a mess. Like the buyer's agent wasn't happy. She was trying to force the sale. And I was like, no, like I told my broker, I was like, dude, I'm not doing this, man. Like this woman, my client, is gonna be homeless if we go to closing. And I am not doing that, right? So do not want anybody to be homeless. So those are all things that come up from the title company. So they're going to pull up any liens on the property, any mortgages that are currently existing on it, um, and if there's any mechanics lien on the property. So their job is essentially to transfer the property free and clear to the new buyer, right? And they'll do what's called a title search, and title search is like a Carfax, but for a house. So they're doing a Carfax for the house and making sure there's nothing wrong with it, so that we could take ownership of it without any questions asked. And whether you're buying hard money, cash, or regular financing, like those are all steps that are gonna be done, right? And you should do that. If anyone tells you don't do it, don't listen to them. Run away. The deal is something's going on. Don't make sure you always get a title search. I've heard numerous stories of people not getting title searches and only to realize that they don't own the property. Like it's a mess. So make sure you always get a title search. Get the title insurance if you can. Highly recommend it, especially when you're buying a resale, or if you're buying a new construction, not so much. But if you're buying a resale, like definitely get title insurance, and especially when there's a wholesaler involved, get title insurance. Like just get it. Trust me. Um, if it's a lot or a large parcel of property, they're gonna order the survey as well. So they're gonna make sure that your bounds are checked out, that you have a survey and a plat map of the property to make sure that you know where your property lines are. So once that's done, if you're doing regular method, you're gonna need homeowners insurance. If you're doing hard money, they're also gonna generally require you to get homeowners insurance in case that place burns down, right? They want to make sure that they're covered because they got skin in the game, right? So you got to have homeowners insurance. And after that conventional method, if you're doing buying a regular home, you're going to do a termite inspection. So termites going to go through the home, find out if there's any wood destroying insects on the property. And if there's any issues, and when you're buying a house on the market, the seller has to pay to fix it, at least in my state here in Virginia, Maryland, DC. So essentially, like that's what happens when you find termite or any wood destroying insects. Now, once that's done, we're going to get what's called a full loan approval, right? So the underwriter is going to come back and say, hey, look, everything looks great. You're perfect. Like, let's get you this home. Like, you're approved, right? So once that is approved, then you're going to go to closing, right? So you're going to receive the funds, and you're going to receive a statement that shows you like the breakdown of each monies that you're putting into this purchase. Like, you're going to see each one broken down line by line, right? Same if you're buying hard money, you're going to see all those charges on there. And essentially, once you sign the CD or closing disclosure by the lender, it's the same document in a way. It's, in terms of, it has the same numbers, but it's not the same layout. So Alta is one statement prepared by the title company, and the CD is prepared by the lender. So CD has to be signed 3 days before closing on a regular deal. Cash, obviously, that's not required for a hard money deal as well. Like, there is going to be a CD that they're going to have you sign as well. So once you sign that, you usually do what's called a final walkthrough to make sure that the property is in the same condition as it was in when you purchased it. It didn't burn down. There's no ice sheet coming down as soon as you open the door, or like when you open the door, there's no flood, like water is rushing out at you. You want to make sure that the property is in the same condition as you specified it in the contract, right? So once that's done, you're gonna do what's like, you're gonna go to settlement, right? You're gonna go to the title company and sign all the paperwork. You're gonna sign the deed of trust. You're gonna sign title work. You're gonna sign the loan docs again, credit score, credit paperwork, termite, whatever. You're gonna sign a bunch of documents, and then you're gonna take ownership. And there you have it. Like, so that's like the steps of buying a home. At least in our area, a lot of states are attorney states, which kind of makes this process a little bit different. So at least in DC, Maryland, Virginia, like, that's the steps that you take to purchase home. Now, here's some like common charges that I see, like, when we're buying properties, right? So with a hard money lender, they're going to charge you like usually 1, 2, 3 points depending on your experience and your credit and how much cash you're putting down, plus 3% closing costs, and whatever down payment that you guys agreed to. So for a regular home financing, whatever down payment you decided to put down, it's 5%, 10%, 20%. You're gonna have that as closing costs, plus 3% as closing costs that funds your escrow account. And right now, we're not really seeing very many lender charges. So I do think like that's kind of gone away. Like, during Christmas, we were seeing a lot of extra lender charges because they were expecting the rates to come back down. So they didn't want to lose out, because people would refinance as soon as the rates drop. So they didn't want to lose out on their money. So there you have it. Like, that's my, like, spiel on how to buy a home or an investment property or whatever it may be. If you have any questions, feel free to reach out. Definitely subscribe. Would love to hit the notification bell. Anyways, I'm Brandon LeCaren. Hope you guys have a great day. See ya.